things and to improve sentiment. When people really take notice, that was the big reaction we saw on Friday. And the markets are probably having a little bit of trouble digesting what was a pretty decent move over at the end of last week. And there's a lot of money has been built up into the market. You can see it in the margin trading accounts. The balances are pretty close to record highs in there. So there's a lot of hot money sloshing around, and this needs constant momentum. You need things to fuel the moves on a regular basis, otherwise people get tired and they start moving their money out of the market. And as you said, there's a number of things coming up in the near term, not to mention the least of which is the US election, and people will be a little bit uncertain about that. But we did get a slightly bigger cut in the loan prime rate this morning than people are expecting, 25 more than 20 basis points, so that was encouraging. But with so much attention and so many people involved in this market, you will need a gradual increase in that. People just need the momentum to keep them going forward. There'll need to be incremental factors to help them. But a period of consolidation is also a healthy one for the Chinese markets, and it seems to be at a higher level than we were. Most of that big rebound we've seen since September is being held, but it's going to be a very nervous period as you come towards the US election, and people are losing patience as well. They want to see immediate results in China, which isn't going to happen because the stimulus programs are things that will play out over months, maybe even a period of a couple of years, but people want to see the results straight away. So you have this disconnect between what equity punters want and what the government is willing to deliver, and it will take time to play out. But the underlying factors certainly have improved to the positive side for China. Let's see whether or not investors can actually stay in and not lose faith in what the PBOC and what the government is putting into place.
Yeah, Mark, and Christopher Wood out of CLSA will be joining us. That's really a good question, I think, to ask him. Thank you so much for that suggestion. I mean, what is appropriate exposure to China while we wait for the other things to respond? Mark, just on a separate note, you mentioned the elections coming through. What are the hedges right now? And the reason I ask you that is, gold seems to be a place that people prefer to park their money at the moment. Can't stop rallying gold. What's going on there?
That seems to be a no-lose situation, doesn't it? It seems to be central banks are involved, short-term traders are involved. Everybody seems to think that gold is the ideal haven. Particularly in the background, you've got some geopolitical tension still in the Middle East. It obviously helps from that point of view. But the fact that real money flows are going back into it because they see it as it's a cleaner play than even currencies or bonds or anything else. If you look at in the currency space, there are trades going on where people think that the election process will favor. At the moment, people seem to think that Donald Trump has a slight edge. That's favoring the US dollar, especially against things like the Mexican peso. The Chinese currency, to some extent, is losing out there. But it's a mixed picture within the dollar world, because on the flip side, you've got the euro very much on the weak side because the European Central Bank is pushing rates lower than people expected. So it's not a clear win there. The other one, of course, is cryptocurrencies. Bitcoin is doing extremely well again because people think that Donald Trump might slightly favor cryptos if he does get in. It can all change very quickly. If we see the polls in the US start to swing towards Kamala Harris, a number of these things will start to unwind. But most people's attention span in markets at the moment, especially in things like cryptos and gold, is pretty short. So anything over the next 48 hours, they're very keen to jump on board of it. Beyond that, they're not willing to make too much of a bet. So you'll see this kind of choppy, erratic trading continue right through for the next couple of weeks until we see what actually happens in the US election.
Okay, yeah, I have to correct myself, and this is going to be embarrassing because Christopher Wood was at CLSA. He is at Jefferies right now. Okay, I get loosed in my my history sometimes. Mark, just very quickly, I mean, I'm looking at oil markets. Your question of the day out of your team is how long before crude oil makes these fresh lows? Is that a question that you think we should be asking given the simmering tensions and really what took place on the weekend between Israel and Iran?
What people are trying to figure out here is how much of a risk premium should they input into oil for these tensions between Israel and other people in the Middle East. And it's not easy to quantify, of course. At one stage, particularly, for example, when Russia invaded Ukraine, it seemed pretty obvious that there was a risk premium of something like $15 to $20 on the oil price just for that dislocation that was happening there. It seems to have shrunk a lot. And the more that we have a situation where Israel and Iran don't engage directly with each other, that premium seems to be dropping and dropping. It may be down to something like $5 by now, but that is really what is challenging the people in the oil market at the moment. Supply is reasonable, the risk premium is falling, and now people are trying to figure out where is a real stabilizing price for this, and it might well be below $70. It could be in the low 60s before we get to that kind of point, unless there's an unexpected flare up back in the Middle East. So that premium is really what people are playing for, and it seems to have fallen quite a lot these days.
Marc, good stuff. That's Bloomberg's MLive strategist, Marc Cranfield. All right, still ahead on the China Show, we asked Jefferies why they've cut their overweight position on India while boosting their China bets.
Yeah, but ahead of that, BRICS members are set to meet in Russia, of course, which holds the chairmanship of this week's upcoming meeting. Predictions on expanded grouping could actually double the GDP of G7 nations of 2037 if we do see, of course, this expanded group. BRICS Plus. Closer look at the agenda. Next, this is Bloomberg.
From taking first steps here to beginning your own wealth journey here. Access international wealth expertise with Standard Chartered to grow your wealth anywhere in the world.
In a world filled with trading scams and deceit, how do you separate the real from the fake? Our mission is clear: to provide safe, reliable, and regulated platforms